Cheers, cheers. So we've got Bitcoin at $9,233.41, down 1.43%. We have Ethereum down 2.73% at 186%. Litecoin down 4.47% at 61. Ripple down 5.75% at 29 cents. EOS down 3.94% at $3.48. Bitcoin Cash, yeah, anyways, down 5%. Ethereum Classic up 2.33%, whatever's going on with that. And we have Tron Shazam at down 2.80%, just under 2 cents. So go ahead and go over to Twitter and follow also Tron Live News. You can just search Tron Live News on Twitter. So also right up there we have a chat. I can see you on the chat on Twitch TV, YouTube, DLive. Go ahead and chat with me. Ask me your questions that you'd like to know about blockchain technology and cryptocurrency, and I will answer to my best ability. No financial advice. I'm not a financial advisor. Do your own research. So let's go ahead and go into the first piece of news. We have John McAfee to integrate the Tron blockchain with McAfee DEX on November 8th, which is tomorrow. So the crypto baron, John, so this is from you today. The crypto baron, John McAfee, keeps his word about and is about to integrate the Tron chain with his recently launched DEX, as was announced previously. So also, I will have all of these news articles in the recaps on Twitter and on YouTube. Go ahead and subscribe, smash the like, turn on the bell notification so you can stay tuned as well. All right. So the crypto influencer John McAfee, who has recently launched his own decentralized exchange, McAfee DEX, announces that he finally prepared to integrate the Tron blockchain with it. The event will happen in about a week. This was a week ago. Now it's tomorrow. So I just want to recap this: that tomorrow, McAfee DEX has integrated the Tron blockchain, Tron nodes, and integration of, I'm going to go and check it out. Tomorrow on Tron Live News, I will go to the exchange and see what it looks like, how it functions, and maybe a little bit about the tokenizations that are being platformed on there, how people are going to list their token on there, and of the sort. As a blockchain developer and decentralized applications, in our own token economics, it's like, do we really want someone just throwing our tokens on there for whatever peer-to-peer trading it can be going at? Or maybe it's good for liquidity, maybe it's good for project expanse, what have you. It could be a back and forth. Some like it, some don't like it. I have no thoughts whatsoever. I'm here to talk about the technology of Bitcoin. So everybody goes on about cryptocurrency, utility, security, blah, 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 blah. But I'm talking about the blockchain technology. So obviously, this is integrating the Tron blockchain technology. It is a decentralized exchange that's working with blockchains and their enlisted cryptocurrencies. But moreover, how essentially the styling of the exchanges. So we're going to go review that tomorrow because obviously it is launching. So McAfee launches his DEX. So he's already launched the DEX. It has Ethereum tokens within it. So the DEX was launched about 3 weeks ago from this article last week, when the crypto baron announced that he was going to release a product he and his team have been working on for over a year. All right. Known for his negative attitude towards centralized crypto exchanges, which hold customers' private keys, McAfee gave the world an Ethereum-based decentralized exchange where everyone can list their coin free of charge. So if you go there right now, which I have been there, it is kind of like the old style EtherDex with kind of like trade view chartings. Oh, what I didn't have up today is Crypto and Proud. Go over to cryptoandproud.com. If you love all things Tron, you can find Tron gear, Tron pads, well, not Tron pads, different Tron merchandise. You can even find some Tron bling for all you want, if that's your thing. And some coins, wherever that went. Coffee mugs, which have you. If you want to drink your coffee in the morning, tea at the night, go over to cryptoandproud.com. I will have that up on the next stream. So McAfee to add Tron Blockchain to his crypto exchange. As per the tweet on the McAfee's account, as of November 8th, the DEX will start running on the Tron chain. This will be another major milestone for Tron due to McAfee's big name and reputation of an influencer in the cryptocurrency industry. However, not as big as it seems, as Tron's recently announced partnership with electronics behemoth Samsung. So we are going to go into our next piece of news. So this is the Telegram one, but we are going to be going, I had the Samsung up there. We're going to talk about that tomorrow then. But let's go into Telegram. So we are going to talk about the Tron integration onto the Samsung phones, the Galaxy phones, and I will show you a video tomorrow. We're going to do that tomorrow, right? About a little video from Justin Sun going through a Samsung Galaxy phone and how the Tron blockchain has been integrated into this behemoth Samsung. But right now, I want to go read through Telegram. So people use Telegram a lot for communications, a lot of the cryptocurrency groups, a lot of decentralized groups, and niche groups about anything. Basically, can be gaming as well. But anyways, Telegram. So if you don't know, Telegram, you can find it on the App Store, on iOS devices, and basically the Galaxy devices as well, Samsung phones. So they netted the largest raising capital gaining ICO to date, I believe over $1 billion. So, which for a while, there was no really commotion, there wasn't much going on with it, but now the Telegram releases test crypto wallet despite an SEC lawsuit. So basically the SEC has imposed a lawsuit upon the Telegram TON, so it's TON for the Telegram's cryptocurrency. We have yet to see it integrated into the Telegram app within itself. There is a wallet, and there will be integration from my understanding. And we're just going to keep track of that. We're going to go through more about Libra also. We're going to talk about Libra, and we're going to talk about Clay blockchain. Sometimes I will talk about and show here decentralized applications. I will mirror from the pads, from the phones on here so you can see, and we'll go review certain projects. Also, usually I do review SRs. So the way the Tron blockchain works is that it's staked by 27 super representatives, SRs, who are basically producing the blocks, fetching the blocks, making sure the chain is running accordingly, and that it's all delegated proof of stake. And basically, so you can freeze your Tron, not lose your Tron. It stays frozen for 3 days in your wallet, and then you can take that Tron, vote for SRs, and the certain SRs, say for the top SRs, they can either give nothing back, or some of them can give Tron back as a rewards incentive for freezing your Tron, voting for that SR to stay as a representative, producing the blocks on the Tron mainnet securely. I will talk about also certain aspects of how the Tron blockchain is built and other regards of what is known as the Odyssey upgrades of the Tron mainnet. So Tron is a virtual Turing machine, and we'll talk about that as well. So Telegram, the messaging app company turned blockchain startup, has released its early desktop wallet for its Gram token. Now users can download the app, the test app for Mac OS, Windows, and Linux 64-bit on Telegram's official website and get their keys on the TON testnet. The wallet asks users to save a 24 seed word and create a password for payments, after which the wallet is ready to receive and send grams. Now you have a wallet only you control directly without middleman or bankers, the app says to new users. So obviously this is saying it's testnet, right? So it's not mainnet. I haven't downloaded the wallet myself. I will go ahead and check it out eventually on another machine. I'm kind of precarious about what type of these sort of applications I want to download on certain developing machines. Apart from just, especially if it's a test net. So I want to see a mainnet wallet. Come on, users can, nothing negative, but just saying, users can also get testnet grams for a special Telegram bot, asking it to send from 5 to 20 tokens. A test transaction took just a minute for this CoinDesk reporter, though the bot warned it could take longer at busy times. So obviously that's directly in the Telegram app, and this is good. It's good because it essentially gives the developers of the testnet wallet for Telegram how many users are going to be using it, what's the backlog, if there's lagging or anything like that, and any kind of bugs that could be found and bug reports that are brought back from people who download the wallet and essentially maybe make bug reports, for example. So it is a good thing. It's most definitely a good thing to test on the testnet. Obviously, we're not going to launch a mainnet part and have a million people using it and it starts bugging out on us. Kind of like how when we had Obamacare, right? President Obama of the US had Obamacare and everyone went to sign up for the Obamacare. And there's so many people that people with their social securities in, signing up for health insurance or whatever it was, and the whole thing just crashed. So that's a government product that was issued out and it crashed. So obviously, it maybe have good for people to do like a test run on that within the government. But so this is good. I'm just saying, it's good to do a test net, but at the same time, to show on here, I want to see the final product for doing like Tron Live News, Crypto Live News, what the Telegram wallet will look like and function like. Tron, an ambitious, so we'll revisit that. But Tron, an ambitious blockchain project by Telegram, which raised $1.7 billion. So that's almost $2 billion. That's the largest one so far to date, from my understanding. Quote me if I'm wrong. You can let me know in the chat on Twitch, DLive, or YouTube, or Facebook Live. So at the beginning of October, the project, they raised $1.7 billion in a closed token sale last year. It has been previously scheduled to launch until October 31st. In September, the team released the code for a full node, a validator node, and a block explorer, signaling the project had been on its way to launch. At the beginning of October, the project published terms for the use of the wallet app and asked the investors to share their public keys using Tron's key generator. According to the developers community chat groups, the same generator is now built into the app. However, the launch was postponed after Telegram was sued by the SEC, which deemed grams to be unregistered securities and asked the court to prevent Telegram from delivering tokens to investors. Telegram subsequently got an approval from investors to postpone the launch until April 31st, 2020 to win more time to clear the situation with the SEC. So a lot of times we do see if there are imposed fines from the SEC, obviously they've raised $1.7 billion. They probably will pay their fines and move on accordingly with their developments. I've seen it before. I saw it with Paragon, another cryptocurrency and blockchain project, and I'm not too fond of that at all from what I've seen. They got sued by their own investors actually for buying, what did they buy? They bought real estate with investor funds rather than actually developing a product, right? So I mean, if you're raising capital, right, if you're in a VC firm or you have a public group of investors and you do something otherwise than what you're saying in your development of your decentralized application, of your softwares, whatever it is that's working in any protocol, fintech, stock technologies, blockchain and cryptocurrency technologies, do your due diligence, right? So the company is going to meet the SEC in court February 18th and 19th, 2020 in New York. Right? Cool. So we'll keep touch of that. It's a big story. So here from Cointelegraph, not a fee but long-term payment, how crypto exchanges list tokens. So this is one of the other things I want to talk about here. This is a brief, and this is gonna be the last piece of news we're gonna go into for today on Tron Live News, Crypto Live News. Once more, subscribe, smash the like, let me know that you're in the chat, ask a question, let me know something that you'd like to see reviewed on Tron Live News, Crypto Live News. I was doing this before, had to take a break due to moving of corporate offices, and we're back at it. I don't pitch my own products. I don't pump my own products. I don't show my own company products and what we're building in decentralized applications that is blockchain based. I'm just here to talk about the blockchain technology in general and what's going on in the world, regulatory, and we will be going through fintech technologies as well as a bit stock market technology as well, because eventually, quite possibly, and we've already seen it, we'll see more of it, of cryptocurrency, blockchain-based smart contract tokenizations of actual stocks. So digitalizing stocks on the blockchain. We're going to see more of that, most definitely. I'll talk about that for which company is doing that currently. So visit the website of any stock exchange platform like NASDAQ or the New York Stock Exchange, and listing fees for new companies are there to see. There's hardly any controversy when it is clearly stated like this, but the same cannot be said for the cryptocurrency space. Here, numerous reports show that cryptocurrency exchanges are being decidedly opaque about the structure of their listing fees. So take Blockstack for example. A recent filing with the U.S. Securities and Exchange Commission revealed a $250,000 payment to Binance in its listing of STX token. The cryptocurrency trading giant, however, denied reports that the payment constituted a listing fee. I hear a lot of back and forth about Binance. No point intended, but anyways, likewise, some major exchanges say that they have no listing fees, but reports abound of projects being charged significant sums to have their cryptocurrency tokens added to the trading catalog. Other platforms, one moment. So, other platforms looking to cash in on the goldmine reportedly engage in wash trading, obtain false trading volumes to charge exorbitant fees for the right to list tokens on their platforms. And again, I'm not shilling, but my company has been contacted about our cryptocurrencies, our tokenizations within our company with horrendous listing fees. And with no point intended, we don't really need like listing on cryptocurrency exchanges so much based upon what we're building so much. And there's really no point to pay large exorbitant fees to many exchanges unless you are like a product that you are scaling that you think has a large customer use base. Then maybe, yeah, it's wise to definitely, as a company who's tokenized with blockchain a cryptocurrency asset, whether utility or security, whatever it is, to definitely do a lot of research into cryptocurrency exchanges, most definitely. And if you have a lot contacting you via email or via your groups, just definitely be careful. As reported by Cointelegraph on October 28th, Blockstack's SEC filings show Binance received a sum of $250,000 tagged as a long-term payment to keep STX listed on the exchange for a year. Blockstack will also make 3 similar payments of 833,333 STX, currently worth $250,000, to cover for an additional 3-year listing period, plus an additional $100,000 marketing fee. So in total, Blockstack is committed to about $1.1 million in fees over a 4-year period. The revelation calls into question a previous statement from Binance that it did not charge Blockstack any listing fee for adding STX to its platform. So I mean, that's kind of like night and day. You know, STX said, well, hey, you know, they filed with the SEC that this was the listing fee, and then Binance denies that. So I'm not really understanding that completely. Most definitely, what's going on there, we may never know. But regardless, whatever. I want to fix one thing. So the Binance spokesperson claims that $250,000 payment was Blockstack's idea and corroborated by Blockstack CEO Muneb Ali, who told Cointelegraph their standard agreement has a listing fee, which is called the technical integration fee. Okay, so technical integration fee is kind of like their developers are using whatever it is, technologies that Blockstack has to incorporate basically their tokenization, their wallets into the Binance cryptocurrency exchange. So $250,000 is no small trick to integrate your cryptocurrency onto their exchange. But obviously they got to pay developers. They have maybe a risk management kind of protocol to Binance in their corporate end. I can't really say one way or the other, but essentially, so a listing fee or technical integration fee, right? Building in their cryptocurrency, their technology and wallets into the exchange is what that means, essentially, so that users can deposit, withdraw, trade the STX cryptocurrency in this example. The technical integration fee is $0 as publicly disclosed in the filing. The Blockstack chief further revealed that the long-term payment was a unique agreement proposed by his company, according to the Blockstack CEO. So in quote, this long-term payment is meant to watch out for Blockstack's ecosystem by incentivizing Binance to list stacks over many years and aligns well with our long-term focus. The marketing fee is a joint marketing campaign that we plan to run later on. Again, that is not a listing fee, but a marketing campaign that we plan to launch in the future. All right. And in one regards, it's good for self-sustaining projects with their own technologies that are encrypted and have a tokenization of economics to their own product and their own company and what they need. That essentially they are doing business with the exchanges to implement their token upon that one exchange. So basically, unless the exchange wants to do all exorbitant work on their own development teams and expend all of those resources and all of that time and paying the developers to do that, it doesn't incentivize that exchange unless it has such high liquidity and transaction fees that it does incentivize and benefit that exchange to list as such. But in other regards, again, like I said, with the McAfee DEX, some people might not like their projects like ERC20s, TRC20s, TRC10s, maybe certain smart contract cryptocurrencies to be listed on decentralized exchanges because they have to retain a certain price value, right? So, which, I mean, hey, let's put it this way. Retain your price value of what you need accordingly in your company. Otherwise, you're probably not really doing your company protocol to the core book of your design and your roadmap like that anyways. So basically what that means is, just as there's Apple, Tesla buybacks of shares, there's obviously the due diligence for companies if there's trading that needs to hold at a certain par value of the cryptocurrency value, and to par value to say USDT, whether it's OmniLayer, which is based upon the Bitcoin protocol, or TRC20, which is in the Tron blockchain, or ERC20 USDT, which is a stablecoin cryptocurrency set at $1 USD value. So basically the pairing is, so if STX, for example, not saying it is $1, but if it was $1 and it was pairing with the USDT with Bitcoin at a certain Satoshi rate, and you can Google what Satoshi rates are on Bitcoin, what that means. I'll talk about it eventually here as well. That they obviously need to do their due diligence to keep STX at $1 paired to Bitcoin in the USDT of $1 par value. If it falls under there, well, they got to do some buybacks accordingly of their cryptocurrency to raise the value up back to $1. So that's what that means. So let's close this out a bit. Binance updated its listing fee in October 2018, promising to ensure transparency in its altcoin listing process. At the time, the exchange giant announced that it will be donating all listing fees to charity via its nonprofit Binance Charity Foundation. Given Binance's explanation that the $250,000 payment received from BlockSec isn't a listing fee, it seems highly unlikely that the exchange will donate that sum to charity. Binance also has a marketing fee, which was explained by the spokesperson. So yeah, it's a little bit in the dark. It's kind of a little back and forth. It's so early in exchanges that it's just kind of the regulatory framework is just kind of really all over the place still, in all honesty. So who knows what's true, what's not right now, really. You have US exchanges, certain cryptocurrency exchanges, and you have the backed futures on Wall Street. You have Gemini and Coinbase, but they've all been kind of there's been certain things said about all of them. Obviously, you know, Bitcoin is bought at a certain premium from mining companies, and then it's sold through maker and takers on cryptocurrency exchanges like Coinbase, Gemini, and whatnot. The marketing payment is at an amount of tokens sent to us, which will be used as rewards for any promotion to be run on Binance.com in the future, and will be 100% given to the users as rewards, including but not, okay, so whatever. I'm not going to really read through that because it's just like what they're kind of doing on their pitch for this token. So we don't list shit coins, even if they pay 400 to 4,000 BTC. Question is not how much does Binance charge to list, but is my coin good enough? If it's not the fee, it's your project. Focus on your own project, right? So yeah, that is true words. So these comments from CEO of the Binance Exchange came after the Christopher Franco, creator of blockchain platform Expanse, claimed that Binance represents demanded $2.6 million to list its. So I have heard this. So I'm not gonna come on. Let's not bullshit around. I've heard this many times of exorbitant different kind of scaling listing fees. So and I've even heard other reports about from the CEO saying the same things. So based upon the project, there was certain things I've read and heard that what's the risk factor of the project, and that has certain varying listing fees. Is that good business of a company? Only the latter tells the difference, right? These comments came after Christopher Franco. Oh yeah, so 2.6 million to list as project's token. Maybe it was a high risk factor. There are numerous similar stories where projects claim crypto exchanges have charged them fees as high as 15 million to be listed on their platforms, but maybe they just went ahead and took another one and just went and threw it on there anyways because they knew the liquidity was there for the transaction fees for their exchange to net their business needs. Binance DEX charges the standard flat. I'm not going to go through like kind of like so basically there's certain points in these articles I really want to go through. So basically this is kind of geared towards you as cryptocurrency exchange users to understand a little bit more just about topics of what goes on in the background a bit, but also for corporate sides and executive sides, for if you are a company that's thinking about tokenizing, thinking about utility of blockchain, thinking about the fintech technologies that are your softwares that are integrating tokenizations and scaling year to year annually for basically the mass adoption of blockchain technologies, then this is definitely important for you to listen to. It's interesting to listen to and to be aware of, for being careful. Just don't get yourself raked over the coals with your company, right? That's basically what I'm saying here. Not financial advice. Do your own research. So here's one from OKEX, head of operations at OKEX, another exchange. We don't have a standard listing fee. Some third-party costs could incur, such as compliance, legal, and due diligence of the project when it comes to listing, depending on the complexity of the token structure and the design. So that maybe can fall back towards why there's maybe a high risk or something like that for $2.6 million to list a token. So yeah, OKEX executive also maintained that the platform does not charge integration or other tech-related fees, declaring, "We believe an exchange should support as many protocols as possible." So there's a bit of typo in there. "To support a variety of token for our users. The cost that we are paying is the time and testing and integration." So that is what I was kind of speaking about earlier, and you're hearing it from another exchange directly. So basically, they also reached, so Cointelegraph here reached out to Kraken, another exchange, about its listing process. And a spokesperson from Kraken said they do not charge a listing fee or integration fee, declaring, "Kraken maintains a rigorous listing evaluation that incorporates a cross-functional team, including business development, Kraken intelligence, legal compliance, product, and engineering. As well, with everything we do, we have been deliberate in our listing approach to design a process with a strong rationale for new assets listed on our exchange." Let's see. This is a bit of a long article. So should listing fees be, let's go into the conclusion here. Some critics rail against the existence of magnitudes of listing fees charged by cryptocurrency exchanges. Ethereum co-founder Vitalik Buterin. So this is a great point here when I was reading about this before. Famously protested the activities of centralized platforms, remarking that he hoped they would burn in hell. So I don't hope that upon anyone personally, but that's just my personal view. But I understand what he's saying and his angst of what he's saying, because many times if you have a technology, who knows, all these different tokenized economics, blockchain technologies, cryptocurrencies, maybe the next one is the next best thing since the spork, the spoon and the fork put together in one unit, or the next thing since sliced bread. We don't know. So, but we'll never know if so many exchanges out there just have to charge these large exorbitant fees. Even if they see the benefit of the technology, they see that this is just something that can really mass adopt and make sense. There's so many projects out there. There's so many white papers out there. There's so many light papers out there, blue papers, purple papers, all papers all over the place that just don't make sense, are ridiculous, off the walls. But the main point is that it's hard for projects to really succeed like that when you can't really get anywhere based upon you're just a development team building a great product, but you're raked over the coals in fees from exchanges. So there is an aspect of centralized exchanges that really, let's put it this way, sucks. But at the same time, centralized exchanges make liquidities. So maybe there will, I mean, not maybe, but you know, I feel in personal view, long term, there definitely will be a median. There'll be, we're already seeing like hyperinflations of different exchanges, but there will be a median of good par values of listing fees over time. and that helps the projects, that sees truly the projects that are really developing something. And maybe most definitely there's still projects out there that are just so great, make so much sense eventually in the fintech technology, blockchain integration of encrypted ledgers, of token economics, of a product, of a company, of another blockchain launching in their own cryptocurrency that functions the transactions of their blockchain financially in a currency rate, like a basket of currencies pairing with like Bitcoin and Ethereum and whatnot. That just makes sense. That you know, that can be sponsored upon some exchanges, and maybe other projects that are high risk that kind of okay, maybe they have you know, a risk assessment fee, technology integration fees for the exchange to really protect itself. So you have to, it's a double-edged sword. You have to look at it both ways, really. That's how I personally feel about it. So basically at the time, exorbitant listing fees formed part of Buterein's gross about centralized crypto exchanges, adding that they essentially had the power to make or break crypto projects. So that's what I basically was just saying here, right? All in short, you said it just like that. Destroying a crypto project that can't really succeed when it could be the next thing since sliced bread. I mean, come on. Some exchanges just really have to look at, maybe they're just doing bad business. Maybe it's a person who just doesn't really know what they're doing, started an exchange, had some money to throw around, built something, but did not actually know the concept of successful corporation business for revenues of an exchange, where they're just like, hey, I want 5,000 Bitcoin. I want, you know, whatever. This is my listing fee. You're going to pay or get out. And maybe it hurts that exchange, you know. Well, again, only the latter difference tells the difference of the outcome. According to Chung of OKEX, cryptocurrency exchange platforms. Oh, what's the rest of this? Yeah. So he said, so he said on to say, some crypto exchange, so this is Buterin still talking, exchange stakeholders like Binance chief did take Buterin to task for his comments, highlighting the fact that centralized platforms have played a huge role in the development of the digital currency market. To be honest, that's a little bit like bullarchy to me, because I think the technologies don't really need cryptocurrency exchanges so much to succeed. I think cryptocurrency blockchain like Ethereum or Tron can make their own in-house basically network for their customers. So Ethereum has games on it, decentralized applications. We'll play them on here on Tron Live News, Crypto Live News, just like Ethereum does, Tron and Ethereum, and different companies developing upon them. They can build their own, an exchange is just like a glorified exchange from pairing to Bitcoin, but the product itself can integrate that itself. So you know, are really cryptocurrency exchanges really even needed? Not so much. Not financial advice, but you know, it's not needed if the company and the development team entity you know, develops their own kind of exchange like that, where they don't need cryptocurrency exchanges at all, and their customers use it and their platforms use it. So according to Chung of OKEX, cryptocurrency exchange platforms have to take a strike balance between enabling greater participation in the ecosystem and maintaining the integrity of their token listing process. So that's basically like a bit of the double-edged sword quote here. We firmly believe that a long-term approach to working with quality token teams is the key to successfully fostering a healthy ecosystem and providing our community with a variety of sustainable, interesting, and useful tokens to trade. So Buterin isn't the only crypto founder to lambast exchanges on account of listing fees. In 2018, Twitter, the Bancorp team, accused platforms of charging more than mainstream stock exchanges like NASDAQ. Yeah, that's another reason that, you know, you just, come on. If you're a day trader, right, and that's your niche, and, you know, whether you're going to make a choice between trading on cryptocurrency exchanges or trading on stock exchanges, you know, if the companies find more solace to not even do a cryptocurrency and just stick with you know, stocks and having a stock share of their company, if they're a security asset, for example, then that's kind of hurtful to the exchange markets, because they're just charging so much. That's more than just a regular stock market. So what's the point? And it does not help drive day traders who just sheerly day trade for revenues like that as a lifestyle, as an income. I like to forex trading, stock trading, cryptocurrency trading. So the tweet also brought up the fake trade. So this is another important part. So this is closing out this article, and this is a big part. Is there's so many exchanges that are just full of crap, and I'm pretty sure probably every single one of them so far, in one way or another, has essentially kind of really put a manipulation of what the liquidities are of the exchange, right? Because we saw on CoinMarketCap, World Coin Index, which is, things are changing around a little bit more, and this is why, you know, we're in the Wild West. But I was saying that back in 2017, 2018 of the Wild West of cryptocurrency. But when you go into 2019, going into 2020, we're starting to see CoinMarketCap, World Coin Index making good improvements to really get it down for what is the real liquidity of exchanges. So if you see like one exchange, I'm not going to name names because I can name names, right? That has such high liquidity, such high transactions upon their exchange that it's just like billions of dollars in one day. Well, I mean, that's another pile of bullcrap, to be honest, because a true exchange will not show that much trading. And that's basically just kind of like taking their own people's wallets and cryptocurrencies and just kind of dumping it back and forth and doing a bunch of fake trading on the exchange to bump their exchange higher on the list, on CoinMarketCap, on World Coin Index, on CoinGecko, cryptocurrency, basically places that you see how much liquidity an exchange has in daily trading. So that's the other thing you have to really watch out for, and that is kind of going to be basically combated to stop that crap. Don't mean to swear, but yeah, it is crap. So yeah, essentially brought the fake trading volume, an issue that is not unrelated to discussions surrounding around cryptocurrency exchange listing fees. According to several reports, most exchanges exaggerate their trading volume figures in the hopes of commanding higher listing fees. Again, I'm not saying anything, I'm not shilling anything, right? But within my own company, there has been many exchanges and top exchanges who just like contacted me and just for listing fees that are just like off the walls, really mundane and stupid, not worth time to even really go that route, because there's no need to. There's really absolutely no need to pay high demands. That hurts development teams and hurts development of the projects, because the point is build the project, do the due diligence, and you can't do that if you've spent all your money on an exchange, and then there's no liquidity. Really, there's no real liquidity upon that exchange by listing and paying all those fees for it. Just stay away from it. Build what you're building. Take the long road. Take the long road. You know, sometimes you got the mountain in front of you. You gotta look up. Oh man, the mountain's so big. You know, I could walk around it and spend like, you know, all this time walking around it. Maybe I'll like fall into a crack in between a hard space in the center of the earth somewhere, or I could just walk up the mountain. Maybe it's a little bit harder, but get over that mountain and build what you build, right? Don't walk around and try and pay a bunch of listing fees to try and get like that's going to succeed your project better. That's going to succeed your company better. To be honest, I really personally don't feel that will. That's why I say that. It's not market advice, but it's just kind of you know, common sense, right? The opaque nature of the listing process on crypto exchanges so arguably contributes to the era of controversy surrounding the issue. The absence of publicly stated listing procedures, as is common with mainstream stock exchanges. Rumors and speculation take center stage in that area. According to the spokesperson from Kraken, cryptocurrency exchanges need to do more in lifting the veil of their listing process, remarking, "It is important to educate the marketplace about the listing fee process when on exchanges. When an exchange lists a new asset, it takes on financial security and regulatory risk associated with the listing of an asset." So there is an argument to be made that libertarian ideals form the core of the cryptocurrency philosophy. In this regard, exchanges charging fees at all, let alone demanding seven-figure payments, is a reality that shouldn't sit well with cryptocurrency purists. Thus, while it is standard for listing exchanges on the likes of NYSE and NASDAQ to have fees, the existence of such for cryptocurrency exchanges remains a topic of considerable discontent. So I will say this, again, I'm not a financial advisor, this is not financial advice, but as a company, you know, building a cryptocurrency exchange, having a cryptocurrency exchange, running a cryptocurrency exchange, look to the stock market, as your elder. That's what I have to say, right? And there's another saying that, you know, basically in the sense of what are you using a token for? Are you a day trader? Are you owning this? Are you using the product? Are you a company that is affiliating with the company as a customer of the company that needs the asset to function and transact with each other in a certain software protocol or whatever the blockchain technology is? Then, you know, be careful which exchanges you look into as well. And also in regards of, if there's a saying, again, look to the stock market as your elder, because if you look to the stock market as your elder, you'll know that's been around for many, many years. Not saying everything's perfect, everything's completely transparent there, but you know, they've been around for many, many years, right? So if you see that there's another saying, you know, basically there's a saying that basically says, if you can't stomach owning a stock for up to 10 years, you have no business owning it for even 10 seconds. I ring the same true of how I feel about cryptocurrencies. So, and as well as how you're going to use and which exchange you're going to go with on a cryptocurrency exchange. If you can't stomach being with a cryptocurrency exchange for up to 10 years, you have no business even being with them for 10 seconds. If you can't stomach having a cryptocurrency for 10 seconds on the ups and downs and volatilities that you see, whether you're using it or not, or just a day trader or whatever, then you know, maybe you really need to relook why you're even in the marketplace like that. But again, that's not financial advice. You really have to kind of take it in your own core competency of decisions. Core competency is like, okay, I have knowledge, but the way I use my knowledge might not be the smartest or safest way. But if you practice the core competency of knowledge to say, hey, is this logical? Does this make sense? Should I take my company? Should I take my encrypted ledger? Should I take my security stocks and on a new stock exchange launching and pay $250,000, or go to another stock exchange where it's not as much but it still has the same liquidity, you know? Or should I go to an exchange that's asking me $15 million, or in other words, asking for $1 million? Basically, that's essentially the core competency of how you're using your mind of knowledge of logic. And that's competency, right? That's all I really have to say. Tomorrow, we're going to be back here on Tron Live News. We were a little bit late today, started a little after the 12 p.m. Eastern Standard Time, U.S. time, right next to the New York City region. Basically, I will see you tomorrow. God bless your kind hearts. We're going to talk about the Tron and the Samsung integration on the Samsung Galaxy phones tomorrow. And we're going to play a little video from Justin Sun revealing that. And we're going to have some more great news upon here, and I'm going to go look into the McAfee DEX a bit. Whether it's fully running tomorrow or not, we only have to see. Again, only the ladder difference tells the true outcome, and we're going to see that, I guess, tomorrow, the 8th. So cheers. God bless your kind hearts. Thank you for joining Technologies Alike. All right, have a great, kind, safe day. See you back tomorrow. Cheers.